What is going on, everybody? In this video, we're providing you a state of the market and stock picks for February 15th, 2023. So if that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, today, quite interesting. So we were expected a 6.2 on inflation. Some people were even saying 5.5, which is quite funny. I didn't think we would fall that much. I think maybe we would have fell a little bit, but today we actually came in at 6.4. So down just zero point 0.1 since last inflation. Now, this means that inflation is starting to get sticky. The big concern here is that there was a revised version on Friday over the past year, essentially trying to encompass what inflation is currently sitting at, and then actually realizing that inflation has been rising over the past like 2 to 3 months over what was expected or what was essentially reported. And then now we are finding out that if it wasn't actually potentially for this alteration to the report of only including 1 year, we probably would have actually been sitting roughly around that 6.7, which means inflation is starting to spike. And you're seeing this massively in food and in housing. I believe housing was roughly around 23% increase. A lot of food is increasing dramatically. Eggs, I think, is like over 70%. Um, Bread is like 14%. All the basic necessities essentially that you're eating has increased tenfold. And understand that a lot of these things don't really seem like a lot, but they add up a lot and they chew away quicker than you think. And so, being said, there's a lot of people out there that still are spending a lot more, and that you're seeing credit card debt grow tremendously, obviously, because we're at all-time highs on credit card debt. And then understand that a lot of that is coming from these expenses. People just trying to absorb the inflation costs on their credit card. And so we're seeing numbers on month to month, essentially debt that they carry month to month is increasing as well. And so things are not looking good. But being said, that is not stopping the market from pumping. But this is what is very misleading: is you had somebody like today, the CEO of Bank of America was essentially saying there's a potentially soft landing again. Things could be great, things could be dandy. Only just last week, they're saying there was a recession, that we're going to essentially hit the debt ceiling, right? Default on our debt, and they were talking all this jazz. And then today they're trying to pump it up. As soon as the inflation came out, that we're starting to creep back up or hitting a sticky point of inflation, and this was what is concerning. uh, China hasn't fully opened it yet either, and there's another theory that when China fully opens, that we're going to get a huge spike in inflation again, which is going to be a very big concern, because if we start creeping back up, you're going to start causing panic, potentially enough to crash the market. That's the last thing you want. I have since moved on over inflation for the past couple of months and try to worry about where is the consumer. Consumer has been beaten pretty bad to this point, essentially being tied between inflation and what's going on with rate increases. The consumer just can't do anything, and it's put us in a really bad pinch. Essentially, a vast majority of Americans, right? And in saying that, we're starting to see what rate increases are doing as more and more layoffs are continuing to roll out. Yet somehow we are still having um, this huge spike in employment. And again, my thesis on that is that people are taking 2 or 3 jobs to cover expenses, and understand that even 2 or 3 jobs that pay minimum wage aren't going to cover the inflation or the current rate of inflation right now. And so we are on a ticking time bomb. And even though the market is pushing up, that does not mean things are good. Things are in a very bad state, and much so that you're having a lot of these bank CEOs and stuff saying, "Oh no, everything's fine," and they are not. They've revised it again, the report, to reflect not as increased numbers as what they could have been. So, being said, where do we go from here? Well, we've just had a lot of big earnings. A lot of them are really, really bad. Airbnb did extremely well in their earnings today, but being said, there was a lot of thought that potentially the travel and leisure section have done very well, and where a lot of these jobs have come from have essentially been from the travel and leisure section. Potentially, we still have some other earnings. I still want to see Target. I still want to see Walmart. Really kind of see where they're at, and then go from that point. Um, Essentially, as far as theft is becoming big as well. I know there's been a lot of different other cases and scenarios and news headlines where people are stealing at such a dramatic rate. The fact you got to lock eggs up is absolutely absurd in my mind, or put them in the cases that you used to put, games or expensive merchandise in, so people wouldn't steal it. And so we are in a very bad state, and you cannot deny that. Yes, there's inflation that's gone down, but people don't have the extra money to be out there buying stuff. Cheap cars have not really come down as far as used cars. More expensive, high end vehicles or middle tier vehicles are coming down, or being left on a lot because they can't get rid of them because of that fact. So, being said, this puts us in a spot in which I do not trust any of this. I haven't really trusted any of these pumps, to be honest. But this particular pump, it looks like we are getting a potential breakout. Like this thing wants to keep running. Again, the stock market isn't going to make sense all the time. This is why you have to play what's in front of you, but overall have a thesis into what could potentially be playing out, and realize that there's still something going on in the background that is going to cause a huge cataclysmic event, in my opinion, and it's only a ticking time bomb from when that thing goes off. And so, in my mind, again, we are living through a very historical time. Can't reference this really to any other time. Yes, there's similarities, but this is a very different time. Could we just pull out potentially and walk away with some sort of growth recession? I think we are pretty far from a potential growth recession. Maybe, possibly, maybe if we look back, go into the future a couple of years and look back, maybe, possibly. But in my opinion, things are not looking good. The fact that the consumer is in so much debt, and essentially continuing to stay in debt, and understand that credit cards aren't on a fixed rate, and that all these rate increases are causing people to get charged more per month for the amount of debt that they're holding. So they just continue to add to the debt that they're currently in. So with that being said, let's look at some technicals here. So tomorrow, again, bulls, you want us to break out at the 4,200. Potentially, if this thing wants to go crazy more, continue to go parabolic, 4,300 is the next level I am watching, but we need to break 4,200. If we can't break 4,200, I don't see this train essentially going anywhere. I think if we attempt for 4,200 again and get rejected, what's going to happen is we are waiting for that catalyst or whatever to occur before we start selling off. And then again, our bottom range being roughly around that 4,100. Take the studies off so you guys can see these a little bit better. Oh, if I could remove all studies, that would be great. There we go. So we'll see. Again, technical wise, this looks like it could be a potential bull flag for another pop. But if we can't break the 4,200, if we get rejected here again, it's only a matter of time, I think, before this thing breaks down and starts breaking down. We're starting and getting that cycle, that normal breakdown cycle, roughly around Marches. So we'll see what happens there. Again, there's not really any big news aside from some Fed members talking and some remaining earnings. But ultimately, what we want to see here is we want to be watching how we open, how the overnight digestion is over the core CPI, and what people are actually looking through. Because if you look through that report, things are bad. The things that you need, the necessities you need to live, are extremely, extremely inflated. And it makes up for all the difference in other things you're not buying right now because you can't afford other things right now. You can't afford to feed yourself and clothe yourself and put a roof over your head. Those type of things, you're not going to be able to afford anything else. And so, nonetheless, we shall see how we open and how that digests. Bitcoin started to pop up a little bit today. We're definitely gonna have to see how this ends. We don't want this thing to drop below roughly around that 41K mark. And then you're still kind of trapped in between that and the 24K mark. So again, I think overnight digestion will really kind of set us to kind of understand what's going on there. The dollar still consolidating around here. Once this breaks either up or down, my thing is if it's consolidating here longer, it would give it more force to be able to pop over these daily EMAs and this monthly EMA back into the danger zone for the bulls and the hot zone for the bears and start pushing back up. But again, bears don't want this thing breaking really roughly around that $100 mark. If as long as you can stay around there, I think the bulls could be happy for potential another run. But we'll have to see. Again, we're waiting for that catalyst to kick off. Ultimately, in my mind, for things to really start to go haywire. Tesla got some news today. Essentially, I think there was something going on with Ford's engine, electronic engine. So that was more of a pump for Tesla. You could even potentially say that this is a retest of Tesla before the dump. Very much a strong possibility for Tesla. So the break, the retest, and then the drop. We'll see if that's true. Again, it has a lot of support, so Tesla really needs a break below this 180 for it to really get some gas. Again, if it can't break out of the 215 mark, going to be a problem. Again, my thing is here is you've already had this parabolic move. To think that you're going to continue to feel the fire up from nothing is just not going to happen, in my opinion. I think you need a stronger catalyst and hope, and all the hope and stuff that we've ran, it's all out. It's all been diminished. The disinflation is not true. All these things that people were talking about and pushing the market up aren't true, and that's coming out. The data that's coming out. But again, the market is very numb to everything at this point. It really doesn't care about bad news unless it's new bad news. So hence, where's the catalyst that is going to break this thing and normalize everything so this thing can be over? Because that's what we need. We need that big event. It's going to put so much pain in the market that Powell will start reducing rates. And right now, it's going to be a long, prolonged period of time for this thing to play out that way. Because as we're seeing, it took us since last July from 9.1 to 6.4 right now. It took us quite a few months just to get to where we're at. And we still got a lot to go to get down to 2%. So now they're forecasting potentially even higher rate increases, even more rate increases, or just go 25 increments until it actually starts coming down. We'll see. We'll go to the next core, then we'll have policy, and then we'll take it from there. Apple, again, consolidating here. It's much like the market. Everything's just consolidating. Over extended move, waiting for a pullback potentially to 135. Bulls, you want this thing to break essentially 155 for this thing to keep going. We need a clean break of that for that to happen. One thing to keep in mind too is NVIDIA is one of the major leaders in a lot of different things, and it's got the same thing that Tesla has. If this thing is a potential retest and drop again tomorrow, if NVIDIA and Tesla start selling off, that's going to be a really bad sign for tech in general. So just keep that in mind. BA, again, very overextended. Needs to break the 220 if it can't. Needs to hold the 203. If it can, it's coming down. These things are just waiting for that candle to start selling off pretty heavy. And then, like I said, there's not hasn't been a lot of back testing, so that's definitely not good. Again, consolidating, all this stuff looks the same. JPM looks the same. Needs to break out over 144. Needs to hold roughly around that 133 mark. So we'll see what happens there. I'm going to throw up Airbnb here real quick. They had earnings, and they are running parabolic over essentially overnight. We'll see if this holds, though. If the market starts to sell, this won't hold very well. But if it does want to continue to rip, we'll definitely have to watch tomorrow and see how the overnight session does. But tomorrow, if the essentially that 9 a.m. or 9 a.m. or the roughly the 10 a.m. candle can break above roughly around the 136 and hold above that or open above that, this thing could potentially start getting even more parabolic tomorrow. So one ticker I do want to watch aside from everything else tomorrow. So with that being said, that's pretty much it. Go ahead and drop your comments, your thoughts, your ideas of what's currently going on in the market. Why is the market pushing up? And then go ahead and drop a thumbs up while you're at it. And I will see you guys in the next one.